So in a previous video, we talked about the circular flow diagram that has basically three main players, all right? We got our people, our individuals, who are known as consumers, and then we have businesses who are known as producers, and we also have the government that makes money off of taxes throughout this whole process. But one institution that's super important for this flow to be flowing are banks. We as people put our money into banks, so when we're making purchases and things like that, it's usually coming out of our bank account. And that's the same thing for businesses. They need loans and they pay for things as well, and that usually comes from their own accounts that they take out. Even national governments have banks that are called the central bank, and in America, our bank is called the Federal Reserve. And they literally control the amount of money circulating the economy. Whoa. But the Federal Reserve's main job is to make sure that we don't hit financial crisis. For example, in March 15th of 2020, the Federal Reserve released that banks could literally hold $0 in cash reserves. So let's explain that. You as a person or business give money into a bank that you want them to hold for you, bank accounts. Then the bank takes your money and the collection of all the other people/businesses that are coming to that bank and depositing their own money into sums of money that they can put into loans that they can lend out to people and earn interest on. And honey, we already talked about compound interest, so you know that banks are making bank. But let's go back to March 15, 2020, when the Federal Reserve released this statement. Again, pepperoni pizza pandemic. So people are not going out, they're not spending money, the money in the economy is not circulating. So the Federal Reserve is we gotta do something about this. So basically, when banks are allowed to give out all of their cash reserves, they can maximize the amount of loans they're giving out. If they maximize their loans they give out, they can maximize the amount of interest that they can get back, making them more financially stable. And then the loans that they give out, they can be giving loans to businesses, and businesses are trying to help themselves in this financial crisis, but also that can help them keep workers. And if you keep workers, that means that workers are getting money. And if workers are getting money, that means they can spend more and circulate the money through the economy, which we know was a huge thing that was not happening during the pandemic. So they were trying to boost it as much as they could in this financial stress crisis time in America. And y'all, if we think about it, banks, when they're giving out loans, they're basically helping people have more money to spend. So even though this could be, you gotta be careful, because when you have more money to spend, you might be reckless. But even when you're being reckless, you're funneling money into the economy. If a bank gives money to a business, that business is able to do things like, buy resources for their company. If they buy resources, they're funneling money into other companies that employ other people and helping them to be more financially stable. And those resources are then in turn making this company more financially stable because it's helping support their business. But also, in terms of people, that business is able to keep the people that are working for them. We know that during the pandemic, one of the biggest things was unemployment. Oh my gosh, so many people were laid off of their jobs. So loans could also help a business keep people on payroll and pay them so that they can work. And then if they're getting money to work, then they can funnel more money into the economy because they have money, so they can actually buy more things. So it's all back to the circular thing about if there's more money to spend, if the Fed is okay, we need more money, so give out more loans so that people have more money to spend, it's not a one-stop shop. It's the circle of the economy. It's the circle of the economy. And y'all, the opposite of that, banks not lending out loans, kind of caused the Great Depression. Because stock market crash aside, a lot of banks actually had no cash reserves in this time. But their response to that was by being sorry, we're not lending out any money. We can't do that. We don't got enough funds. We got to protect ourselves. And them not lending out money caused so many businesses to fail. And because those businesses failed, they couldn't employ people. So mad people were out of work, and it just caused domino effect. And luckily today, most of our banks are insured by companies like the FDIC and the NCUA, which will protect your deposits up to about $250,000. Okay, I get how banks are cool for America, but what about me? So there are actually a whole bunch of different types of banks, but the one that you're probably most familiar with is retail banks. Think Chase, think Bank of America, etc. And another institution you might have heard of are credit unions. And credit unions and banks are pretty similar. I mean, they offer pretty much almost the same exact things. Checking and savings accounts, loans for home, car, business, personal, lines of credit. Speaking of credit, they also can give you credit cards. You can also get you a CD, First of all, why do banks sell music? Second of all, like, why on CDs? Like, that's literally, like, so 80s. CDs in the bank world are actually certificates of deposits, which are not to be confused with the CDs that you might have listened to for music in the 80s. So basically, banks are like, so, I see that you got a lump sum of money. What if you kept it here? We give you a nice little high interest rate. Like, it's gonna be higher than if you left it in a savings account. Cause we got it like that. And if you leave your lump sum here, but like you don't touch it for like, 28 to 60 months, you could choose the longer you wait, the higher the interest rate gonna be though. And you know about compound interest, right? Yeah, you know how that works. Yeah, so if you do that, you could, that would be good for us because, we can use that money for loans and things. And, that makes us money. It's like, we both making money. Like, how about we both make money together? And then another thing that you can do at both institutions is open up a money market account. Now, perhaps I have just been living under a rock, but I did not know what a money market account was. But apparently it's like a normal thing. So a money market account is like a traditional savings account. It usually has similar interest rate savings as the regular savings account. But this one makes it easier to use the funds from your savings account because they literally give you a debit card and check writing privileges. Is this a savings account? Okay. These accounts are usually used for people who know that they want to make a purchase later down in the line. So say you want to make a down payment on a house that you know that you have coming up, and you're like, okay, let me put my savings into a money market account so that when the time comes for me to pay that down payment, I can take a check out from that account because I'm allowed to do that. But I will say, do be careful because it's a savings account, but they kind of give you privileges like it's not a savings account. Y'all need to remember to save, okay? Saving is important. So anyway, back to the main point. Credit unions and banks, super similar, have basically all of the same products and tools and resources, but the biggest difference is that credit unions are non-profit while banks are for-profit. So a credit union can usually offer lower fees and lower interest rates, while a bank has to keep it high because they're trying to make that money. So one thing to keep in mind when, searching for what bank is right for me are the fees. So I know we talked about banks making money through interest from lending out loans to borrowers, but they also charge a lot of fees. There are like maintenance fees, there's late fees, there are fees if you take money out of like your CD too early because you're like, I actually do want to take money out of it. They're like, oh, you can do it for a fee. And like different institutions are gonna have different fees, so just like look into it and be like, all right, who is giving me the least fees of the things that I would have to be paying the fee for, Those are the things you should think about. So you should keep in mind the purpose of the reason that you're going to use your credit union or bank, and then look at the fees associated with the things that you will be actively using, and then look for the one that has the least of those. Or if you know that we want certain perks that this bank might have or this credit union might have or whatever bank type that you are looking into, you just want to make sure that it's giving you the best bang for your buck, because maybe they have higher this fee, but this other thing that they have, none of the banks could do it like that. They just could never. But also, y'all, there are also online banks, and they don't got a lot of fees, so don't forget to check there. Don't just look around your area. Check your phone, check your laptop. But basically, the most important things to keep in mind are their fees, their rates, like interest rates, like how much are you going to be making, or if you're taking out a loan, how much you're going to have to give, and also things like convenience and accessibility, like, are you making my life easier or not? Or not. And also, do you even have the products and services that I'm looking for? That's number one. Like, what are you here for if you're not even doing what I need you to do? So yes, it's so important to make sure you're doing your research about banks so you can find the one that's best for you. But also, I hope you learned that banking is so important for the economy. It literally keeps the economy flowing. It's so integral in the circular flow diagram of like people, businesses, and the government. Like, I need to put my money somewhere and I need to take it out. And when I'm buying something, I'm using my bank account to pay for it. Like, it's a whole circle. But I hope you learned how important banks are and how, like, if banks collapse, bad things happen. So hope you learned something cool today.